The December 17th pattern. Is the Bitcoin macro trend programmed? This one's going to be a little wild for you guys. I'm not going to lie. Stick with me. It's going to be fun. Live chat is open, and I'm going to share with you guys something that's probably going to blow your mind. Let me figure out where I've got things playing because I have way too many sounds in my ears right now. And we'll figure this out. Let's see. I think that is going to help. There we go. Oh, man. Hey, guys. Hope you're having a good week. My name's Keith Allen. For anybody new to the stream, glad to have you with me. Looks like, gosh, what is going on here? I didn't even have all of my right stuff going on here. Let me fix it. Let me fix the screen. Let me fix the stream. Good Lord. What a day. What a week. What a year. It's coming to an end, but there is still time for some how should I say, volatility? Yeah, we're seeing plenty of that here these days, right? And I think there's more to come. And I'm going to show you guys something today that I show you every year right about this time, and it is a bit of an anomaly, bit of a wild card, if you will. I if you've followed me for any length of time, you know that I don't subscribe to conspiracy theories, and I really more recently haven't really been paying much attention to narratives because I want to focus squarely on the charts and the data, and that has helped me make pretty good calls here in recent history, and I'm hoping to keep that streak running through the end of the year and well beyond. But this one is hard to explain, but I'm going to show you what I'm seeing in the charts and what I have seen literally every single year around this time, which makes me scratch my head a little bit. But we're going to see if it plays out this year as well and see where we go from there. Before we do, though, do me a favor. If you are new to the stream, welcome, welcome, welcome. If you are an OG member, I cannot tell you how much I appreciate you guys. I want to remind everybody that Material Indicators is having a huge holiday sale right now, 33% off every single plan. And I don't know how else to put this other than to say I fucked up a little bit. Among the many hats that I wear, I am in charge of price modeling for all of our products that Fred makes for us. And in the haste of the holiday season and getting our holiday promotions ready, I screwed up and I went with like an old price model. And not only that, I had like we just created a new 3-month subscription for the holidays. And for some reason, I had it set to renew in a month. So that obviously was not right. I fixed all of the pricing and the renewal dates, and the correction worked in your favor. So additional savings, if you haven't checked it out yet, please do so. Links are in the description. You can, of course, find all the stuff at materialindicators.com. Also, if you haven't done so yet, you want to join that Telegram community. It is just awesome. We are in there every single day talking shop. So if you're looking for a serious community, no moon boys, no hype, no BS, come join us. Again, links are in the description. So what exactly are we getting into today? Hang on a second. I'm getting pinged. Got to respond. Business duty calls. Don't these people know what kind of schedule I'm on here? Hang on a second. Let me just deal with this guy. And we will get into, actually, let me put a chart up while I'm doing this, and you guys can kind of digest what we're looking at here. Let's see. Let's go to this guy, my trusty macro trend reversals pattern. Every single year around this time, since I've been in the game, we have seen something major develop in the charts. And when I say major, I mean like macro trend reversal. So let's go ahead and share a chart. And I want to remind you guys, live chat is open today, as always. If you are with me, do me the favor, smashing some buttons, hit the like, hit the subscribe so you don't miss any of the future streams, not just because I want to have you with me, but because I don't want you to miss out on any of the alpha that I drop here on the regular. Okay, let's get into this guy. Share the screen. Let's go with this one. And here we go. Yeah, look at that. There's a lot going on there. This is this one actually only goes back to what? 2017 when I started. And when Binance started. Coincidence? Maybe. I don't know. Let's just go through history and see what exactly I'm talking about here. And we're going to see how things move from here. As you can see, Bitcoin did reject here from the 21-day moving average yesterday. And yes, I realize today is December 18th, not the 17th. I should have, in a perfect world, I should have done this yesterday, but that's okay. Nothing has changed. And it's going to take some time for us to validate this and confirm it. So let's just look at the history on it. We go back to 2017. We can see that we hit a 2017 top. This is, if we reminisce on the days, this is where I came into the scene. Trading crypto back in October of 2017 is where I took my first trades. Price was trading in the $6,000 range. I got my very first order, my very first $100 of Bitcoin I purchased at $6,001 per coin. If I only still had what I was accumulating in those days, right? It's been bought and sold more times than I can count. But if we go to December 17th here, we can see, where did the market top? Well, we were pretty close, right? Let's see. This was the 16th, this was the 17th, and that was the exact top on December 17th. Interesting, right? Why isn't this auto adjusting for me? So that in itself is pretty wild. I think you'll agree. So that was 2017, December 17th, 2017. That was the macro top for that cycle. Now we move into 2018. What happened in 2018? On December 17th, 2018. Let's just confirm that we got the right days here. Yep. Boom. We recover. Let me turn off this volume profile here so we can clean it up a little bit. All right. December 17th, we bounce and we start climbing our way out with a reclamation of the 21-day moving average. So technically, the very, very bottom was on the 15th, but the big bounce came on the 17th, and that is what sent us out to reclaim that 21-day moving average, and off we went to start out the next bull run. Now, it wasn't a straight line to the bull run, right? We had a retest of resistance here around the 50-day moving average. We golden crossed, death crossed again, recovered it. And then, so this would really be the beginning, but this was that breakout moment, that first breakout test. Let's go again to December. So you can see, like, it's not pinpoint perfect on December 17th, but it definitely is showing us some noteworthy things around this time. So now we go to 2019, similar set of circumstances. Let's make sure we're on the right time frame here. December 17th was right here. We bottomed and started climbing our way out. Now, this was an anomaly, in my opinion. Black swan, COVID crash, big, fat, nasty dump. But this, to me, had we not had COVID, this would have marked a nice reversal. And we can see, that first one, 2017, was an 84% dump, meaning, this bear market. 2018, this led to 344% to the upside. 2019, another 943% to the upside, not without any caveats, right? We had this black swan here, and we always need to be prepared for those black swan events. 2020 macro trend breakout here. So yes, we were already on the uptick, but this is a year into it after the COVID crash. Things are grinding along nicely, and we get boxed into this little range here. We retest support at the 21-day moving average, and then we break out from this consolidation range. 2021. That's a bear market confirmation in 2021. First close below the 200-day moving average, and confirmation of the macro breakdown, right? We had the death crosses between the 21 and the 50, the 21 and the 100. The 21 and the 200 came shortly after that, but this is, this was the second breakdown. We had one wick below, came back, recovered it, and this was the second breakdown of that 200-day moving average here, and then we ground down. Now we go to 2022. Last flush below the 21-day moving average before a macro trend reversal. Here we go. Just like this. Boom. Flush it. And off we go. We see the recovery. We see the unwinding of the moving averages here. And back into another bull run. This one, okay, I want to be accurate here, because this one was also technically on December. Let's see. So we flushed it on the 16th, and then on the 17th. Oh yeah, I have it marked as the 16th. That's why I said it's not always exactly the same day, but it's been, right in this ballpark. 16th, 17th, 18th. All right. So now we go to the next year, 2023, support test at the 21 to reclaim the 0.5 fib, right? We flushed the 21 one more time, flushed down to the 21-day moving average one more time. It was almost a 6% dump. And then we started to rally out of this, right? Again, no straight lines. This was the attempt. And we can see it faked out, bounced off the 100-day moving average before the recovery. But the notable part here was reclaiming that 0.5 fib, right? So as you can see, here's the fib extension, the green line, and ultimately we recovered it and kept moving on. 2024. 2024, new all-time high above the 1.618 fib. December 17th, once again, at this time, was the all-time high in 2024. Moving into 2025, we kind of know what happened, right? We had the election. Trump pump came down here in November 24. We peaked up at a new all-time high, and then started to consolidate, double top. Things broke down, came back up, and obviously we've been setting new highs since then. The new all-time high came obviously much later in October of this year, and this is now where our new all-time high is. So what happens now? So here we are in this same kind of realm, and we have not just a rejection. So December 17th was yesterday, and we got another retest of it today. Yesterday was a rejection from the 21-day moving average. And if we look on the weekly, what's happening now? We're now testing support at the 100-day moving average. And if we lose this, and everything I have pointed at you guys in the past several weeks has suggested that we probably are in a high probability situation of losing this level. That's what I'm watching for. I'm not going to lie. I took an MTF scalp a little while ago, thinking that we might go after that 21-day moving average and break above it. But then I looked at this and saw this breakdown and said, you know what? I'm gonna I'm gonna take that hit. I'm gonna close that trade real quick. Took a small loss on it. No big deal. I was up on it yesterday, so I'm still net positive between yesterday's trade and today. But I don't like what I'm seeing right here. So the theme here is macro reversals, and I think that I don't think I personally have already declared macro bear market when we lost this here in the end of November, when we lost the 50-week moving average and failed to close above it time and time again. So for me, we're already in a bear market, and that's been validated a couple of times, 3 times in my estimation. I always look for multiple confirmations. We have the fact that the green 21 has death crossed literally every one of the key moving averages in the daily time frame. All of the key moving averages, the 21, the 50, the 100, the 200, are all death crossed in the daily time frame. We have the 50-week moving average. We lost the 50-week moving average, and now you can see this is imminent. There's an imminent death cross coming between the green 21 and the red 50, and that's going to be another nasty dump that follows that. And I warned you about that last week. So go back and watch that video if you haven't seen it yet. But there's more downside coming based on that, the history of that move. And this one here as well. Losing the 100-day moving average hasn't happened very many times, but when it does, it ain't pretty, my friends. Look at this. Doesn't mean it has to be exactly the same this time, but you'd be, in my opinion, foolish if you were not prepared for a bigger dump and you're clinging on to some sort of hopium that there's going to be a huge year-end rally because Trump wants to make more money. That guy's been blowing hot air up your ass for years, and that's not going to change anytime soon. So don't believe the words, believe the actions. Follow the money, follow the actions. There's been a lot of promises made, very little delivered. So keep that in mind. That statement's probably going to get me an audit, but whatever. I speak truth. That's what I try and do for you guys. Not what I try and do. It's what I do. So again, this is what I'm watching for here. The miracle move would be a bounce off of this 100-day moving average and a recovery. Okay, so this could still go either way. It's early. It's too early for me to say it's done. But time is ticking, and we got to see where we close this week. Okay, I've told you before, wicks don't count. It's where we close. So we could wick down here and still close above that 100-week moving average, and that makes a big difference. Now, if we close below the 100-week moving average on Sunday, and then the following candle closes below the 100-week, completely lives below that 100-week moving average, then you can expect greater downside, potentially as low as the 200 moving average. Yeah, anything's possible. Can't rule anything out. And then that third validation, I told you I look for multiple validations of anything, right? And that third validation for me, another thing we've been talking about is this RSI here on the weekly calendar. On the weekly time frame, anytime Bitcoin is trading below this 41 range on the weekly time frame, that has historically marked bear markets. And so we're clearly in that. We're clearly below the 50, and now we're fighting to hold the 100. So where do we potentially go from here if this indeed plays out, right? And again, not over yet. There's the miracle. The miracle on Main Street would be to reclaim the 21-day moving average here this week and start rallying out towards the end of the year. Can't rule it out. There's certainly a lot of noisemakers on social media claiming that's going to happen. I don't happen to be one of them, but I won't rule it out. I don't rule anything out until it's done. Let's see. Who have we here? Extorian. Don't you expect a bounce somewhere? Yes, there's always a bounce somewhere. Where will it be? That's the question. It just strikes me as weird that it'd go down this quickly with no intermittent relief. Well, I agree. Straight lines tend to not be sustainable. So the faster it falls, the more likely it is to bounce. Um, that said, if you're talking about the grind that we've had down so far, this is not that fast in the grand scheme of things. There have been faster. Um, so let me turn off trend precognition and make it easy. Make it easy to see. There have been periods where we have declined faster. So um, I'm not sure how long you've been in the market, historian, but this was a rapid decline here for sure, coming off of that uh, November 10th rejection. Um, and what we're seeing now could really cascade things. So, in terms of where there could be potential bounces, I've talked about this quite a bit here recently. Lots of targets for me. They include the technicals, they include the timescape levels. And so the next timescape levels coming into play here aren't too far away. We have our Q2 2025 timescape levels. Both here's the opening of the quarter and first week of the quarter. Both of those are significant. We have a lower low we're watching out for here at the 80.5K range. And that's sandwiched in between those two timescapes. But this one is interesting to me. Down here at the 75K range, we had a double bottom down here. This is possible. Yeah, I know that's a long way from here, but it's possible. So between here and there, I could certainly see potential bounces coming off of these levels here, any of these ranges, but I'm just not confident that they would hold. The 86 range, we had some consolidation here, and we're obviously we're really retesting this range now. We've had some consolidation here, but this time around, not that much. So where do I think we end up? Again, these are all viable targets in my opinion, and it's really a matter of how long it takes to get there. If we continue at this pace, the faster we fall, like I said, straight lines are not sustainable. So like when we saw this big dump like this, we had some recovery. Not the full recovery, but we had some recovery before we went down. And it's important, as I said on the way up, as I said during the Trump pump, on the way up from here, hey, we got to have some consolidation ranges. We have to, Bitcoin has to have something to rest on the way down. So I look to all of these consolidation ranges as potential landing zones. I like double bottoms. I like areas where we have concentrated timescape levels because those are a bit stronger in my opinion. And I like the technicals. And one in particular that stands out to me, well, there's a few. Again, this double bottom here around 75K. To me, if we get that low, I think that the yearly open comes into focus. And excuse me, not the yearly open, the 2021 top at 69K because of the fact that we spent so much time consolidating underneath this. I think we had like 8 months here. So this is a potential target. And remember, the market really likes to shake people out. So overshooting some of these targets just for the shakeout, certainly a high probability. Now, if we got to this place by the end of the year, which is, we're what, less than 2 weeks away? That is indeed pretty fast. So if this is a bear market like any of the previous bear markets, then guess what? We're going to grind for a lot longer and price could go a lot lower. And that's when you have to start thinking about the 50s and 40s and potentially even lower than that. Do I think that we're going to go and retrace this entire move? I don't. I really think that's not a high probability, but I won't rule anything out. this 25 to 30K range is really where we consolidated after the FTX crash, right? The FTX crash is what brought us all the way down to that 15K range. I don't think we're going there. This would not be, how should I say, this is not a super high probability in my opinion, but it's not out of the question. And even if we hit it, if we hit this 25 to 30K level, we're still making a macro higher low, right? It's if we dip below this 15K level that we are fucked. Like at that point, it could go to the 3,000 range, which has happened in prior crashes, right? I actually have that documented here, right? We have a crash landing zone that's pretty ugly. 2018 market, 2020 market, those crashed in the 3,000 range, 3,200 to 3,800. So again, I don't think that's necessarily where we're going, but I am not ruling anything out. This is the macro lower low that needs to be protected in terms of the long-term health of Bitcoin right here. That's a long way from where we sit now. I look to these other consolidation ranges as all viable targets, and I look to these timescape levels to really be a guide in between, and anywhere that we have confluence between the timescape levels and the other technical analysis or technical signals on the chart in any time frame, that to me builds additional strength. And as you can see at the moment, we have the 200-week moving average pulling up closer to that, to a 2021 timescape level, and so over time this is going to pull up, and depending on how long it takes us to get there, maybe this pulls up as high as that 2021 top, and then that would make that a really interesting target to me. So I know this is a bit of a wild analysis here, and it's some rare and funky stuff, but sometimes it's the not so obvious things. And sometimes it's weird shit like this that gets your attention. And this one has gotten my attention every single year because it has brought us to what has proven to be an interesting time on the charts. Do I know why this happens on this certain day? Not a freaking clue. If you do, I'd love to hear from you. With that, I'm going to wrap this one up. I got a lot to do here today, but I wanted to make sure I got this out here, at least while we're still in the realm of timing of when these things tend to happen. And so right now we're looking at a rejection from the 21-day moving average yesterday. And today we're looking at a potential loss of the 100-week moving average. And if we close below this, not just today, but if we close below this on Sunday, on the weekly close, be prepared for far more downside. That's about all I got to say about that. You're right, speed isn't that wild. It just seems because everybody I know in crypto is getting absolutely hammered. Yeah, they are. You know why? Because they're buying into narratives and they're not paying attention to what the charts are telling them. And you could take this whole December 17th thing out of the picture and just look at what's happening here on the charts. There's nothing here. There's nothing between losing the 100, getting a rejection from the 21-day moving average. Nothing between getting this rejection and losing this level that is remotely bullish. This is as bearish as it gets, in my opinion. And if this happens, there's likely going to be a cascade that follows because the algos are programmed. There are many algos that are programmed around these key moving averages, and losing one and getting a close below it, not pretty at all. What else you got to add here? 75K would be a decent first candidate for a local bottom. Local keyword there, right? Could see it as low as 28K. I think that is certainly viable. What about the correlation to the stock market? We seem disconnected, right? We definitely seem disconnected at the moment. So I'm not really sure what's happening there. I think that people are waiting for this crypto thing to sort itself out. I think that as I mentioned earlier, when this crypto legislation, passed, the Genius Bill, that banks were going to be coming on board, and I mentioned that I expected a deep correction before that happened in full force, so that those banks could load up at discounted prices, and that is happening as we speak. So all of these things are starting to pan out. It's also worth noting that not all of the crypto legislation has passed, especially through the Senate. So there's a timeline on that stuff. And if it doesn't go through, those bills are going to have to be redone, resubmitted, and revoted on. And so I'm not speaking of the Genius Act per se, because that one's already been signed. But I think the Clarity Act, I'm not sure that one's been done completely. And there's more about regulation and what happened with that Bitcoin reserve we were supposed to get. All of those things Congress needs to vote on. And so if we get through January and that's not done, guess what? Market's not going to like that at all. So I would just say the narratives can mislead you. Be focused on the charts. The charts do not lie. And the honesty we're looking at right now, well, I'll make it big for you. We are currently losing the 100-week moving average. Can't show it to you any clearer than that. It doesn't mean anything if we don't close below this, right? We can wick back, we can climb back above, and this can just be a wick. But watch this very, very closely. Position yourself accordingly, and make sure that you are stacking powder or setting some aside so that when the bottom does come, whether it's at 75, 69, 50, 40, 30, 25, wherever, you got powder for that. All right. Gonna wrap it right there, guys. Extortion. Extortion. Is that your name? Extorian. Extortion sounds good though. Thanks for joining me, man. I appreciate it, and hope you guys have a great rest of the week. It's a time. Listen, it's family time this time of year, so a lot going on for all of you. I'm going to do my best to keep posting throughout the holidays as much as I can. Got a little bit of travel in the mix coming up next week, but we're gonna do our best to keep you guys in the loop. And if you have not done so yet and you want to stay in the loop, join us in the Telegram community, because we're in there every single day. Links are in the profile. Have a great day. Hope this helps you trade smarter.